afternoon. Talk to us about how you've seen the budget and what really stood out for you in terms of what could be themes which could really benefit from the budget stimulus, which earlier may not have benefited as much. So I'm trying to get a sense, anything that really stood out for you.
I would say rather than any specific theme, um, uh, it's just more of a budget for continuity. I don't think from this budget any particular theme comes out, uh, but it is more a budget for continuity. The government's view is that the policies of last decade or so have worked fine to deliver a robust growth of 6%. And why not continue with them and push them further along? And that is how I interpret the, the thought behind this budget, Harsh. And no particular, we've seen capex for defense, capital outlay for defense up 20%. But given the year that it was and what's going on around the world, that's only to be expected. In fact, myself included, I think others might have expected even a faster increase in defense. So is that a theme that emerges out of it? No, it was already an ongoing theme, if you would, for lack of a better word. And we're continuing with the indigenization of defense that is, has been at play for last several years. And the defense outlay is somewhat stronger this year, but it's only to be expected. Other than that, I don't think, seen railways, the high-speed corridors have been announced. Again, that's continuation of the broader emphasis on infrastructure and in particular on railways that we've seen over the last decade. So nothing out of the trend line that departs from the trend line that we've been on over the last several years.
Prashant, would that disappoint you or would that leave you satisfied? Because really the question was that there could have been more done. Would you believe that? Or would you believe that there was in any case very limited fiscal room available to do anything, and therefore fiscal prudence to a certain extent was the right way to go?
See, my dil always mange more. I would say in every budget, my expectations are, I wouldn't say expectations anymore. I would say my hope or my wish or my wishes are always for a lot more. But over time, I've trained myself that, and when I say over time, I'm talking about decades here. It isn't necessarily the way government with all its pulls and pressures might think about. I think there was the reaction yesterday in the market was also, I think, to do with rather than any specifics. Given all that's happening on geopolitical front, on the tariff front, on the market front, which Indian market has underperformed by about 40% relative to the other emerging markets, and also very sizably to the developed world over the last year or so, there's some expectations. The market men, I think, are thinking of it as more of a crisis than the Aam Aadmi. The Aam Aadmi always thinks he's in a crisis or she's in a crisis, but or the government, let's say. So because market men were thinking it's more of a crisis situation, they were thinking it would be more of a budget that would be reflective of budgets that we have during times of crisis, which are bolder than the normal ones. So there were some expectations built in that there could be potentially a cut in capital gain, not a cut, but to do away with capital gains tax for foreign investors. I never bought it. But over the last few days, I think those expectations were building up a little bit, and that's why there could be a bit of disappointment yesterday in the market. But you have to keep in mind that over the weekend, today you'll see the Asian markets are down quite substantially. So if you take from Friday close to today, Indian markets actually outperform. Now, one can argue Indian markets haven't participated in everything that's led to strong performance of Asian markets. When Asian markets pull back, we shouldn't even have pulled back the 2% that we did. And I think that's true argument, and then partly it's to do with, um, I think, disappointment in certain segments, for investors, where in certain segments they had expected some kind of a substantial change, substantial departure from the past, including most specifically on the capital gains tax front.
Prashant, one of the key drags, at least in Indian markets, is FIIs. And yes, some pressure on the rupee is one of those factors. What else could actually bring FIIs back? And is 2026 the year where you're anticipating FIIs to come back? If so, what sectors are you positive on?
See, like investors of every kind and everywhere, FIs are no different, because ultimately what lies underneath FIs are also humans. So the human tendency is to follow recent performance. Recency bias is very, very strong. Now, but this has to be viewed in context of two things, or two, not things, but two components of FII flows, if you will. One is that of the $800 billion of FII money that is invested in India, about 75% come from regional funds, not India dedicated funds. So they come from emerging markets and other global equity funds, and only 25% is India dedicated money. So for last many years, emerging markets were doing very poorly and seeing very massive outflows. So even though Indian markets were doing well till late 24, because of the outflows from emerging markets, the overall figure for India was not great, was not positive. Yeah, even though the India specific flows would have been positive. Now, last year, this reversed. The India specific experience was poor because of India's underperformance. And EM so far has not caught up. While EM did fantastically well last year in terms of performance, I think it was the first year after a decade of underperformance compared to the developed world. So if this year that outperformance were to sustain, which so far it has, year to date, EMs are outperforming developed market by 7-8%. That sustains, then you'll start seeing flows pick up in emerging markets. And that is a much bigger force in determining the flows in Indian market. And if it sustains, the positive outperformance of EM against developed market were to sustain, then that itself should draw in more flows for the Indian market. So it remains to be seen. Hard to say whether EM would outperform going forward or underperform. It has over the last 13, 14 months. If that sustains, we'll see positive flows.
Okay.
India specific, right now, India specific, the situation is a little weak from what we see. India specific flows are negative right now, but it's the EM flows. If they were to turn meaningfully positive, then that can offset the India specific flows.
All right, Prashant, thank you so much for joining us. What we're going to do is we're going to cut the conversation here. Thank you so much. Viewers, we'll also slip into a very short break. On the other side, we'll continue conversation. Stay with us here on ET Now.